Okay, great evening, team, and welcome to the CM Live workshop. We're going to be discussing, in essence, trading the CM scalper mode. Okay, that's sort of the purpose tonight, but we're going to cover a few different things, and this is just the groundwork for what we're going to do here in the next week, the completion of the TST Combine, and then the live trading that's to come after that. This sort of sets the stage. And here in the this first segment, I'm going to be talking mostly about mindset, all right, which in my opinion is the crux of trading. Mindset is literally the center and the core. Now, it stands to reason you have to have a solid methodology. If you don't have a solid methodology that gives you a bona fide edge somehow, there's no hope. You can read all of the Trading in the Zone books. You can, recite it word for word. You can do everything under the sun, emotionally, mentally, to prepare yourself, meditation, whatever. If your method doesn't work, you have no hope. All right, so we understand that. But there are a lot of people who have viable methods or a viable edge to trading. They just can't seem to pull it together. All right, and so then the missing link is the correct mindset. But if you put together the correct mindset and a methodology that works, then success is virtually guaranteed. Of the two, the functional methodology is easier to come by, in my opinion. All right, you cannot buy patience and discipline. You cannot purchase or download, self-control and the correct mental state. Those are things that you just have to find and create within yourself. So let's discuss that along with some technical analysis. So here we have crude oil, and this could be any symbol at all. It doesn't have to be crude oil. I just happen to be there, and I'm going to take this to this being Saturday, August 16th. I'm going to roll back to Thursday, August 14th. This is the overnight session, and this is price action rolling lower, so on and so forth. And I'm going to identify the open of the pit range, and I'm going to put the open range on there. All right. I don't know how many years it's been now. It's been a few years in that I have, I guess you would say, discovered, perfected, and honed the open range roadmaps methodology of price study. In other words, this is a price filtration. This tells me which way to lean. Okay, and I've watched this day in and day out for years in multiple symbols. And it took a long time. It certainly hasn't taken all of this time, but it took me a long time to really ingrain some deep-seated beliefs, some core beliefs. And that's the same for you and everyone else who discovers or purchases or comes by, however means you do, new information. Whatever you get new information, it's going to take you a long time to really deeply internalize it, to have that real deep trust. Okay, I can sit here and tell somebody all about the statistical probabilities on a chart and what's most likely to happen and so on and so forth. And I'm sure the people who hear it for the first or second or 12th time believe it to whatever degrees they do. But that cannot replace seeing it with your own eyes, observed in real time over and over again. All right, I understand that. A lot of people don't. I get a lot of questions, email questions from traders who will say things like, "What is your, do you have do you have system results? Have you back tested this and that? How many average trades do you get per day? And what's your average excursion? In other words, how far in favor does your trade go? How far against does a trade go? All of that statistical crap, quite frankly. And those are things that we've been taught, that we've been handed down, that are quite frankly worthless and wrong and ineffective and all of that. That's just repeated mantra. All right. If you try to quantify a system based on the mean excursion of the average trade and how many trades per day and what time of the day is the best and so on, all that does is give you a snapshot in hindsight of what went on in the past when the markets were in a current state of behavior. The very moment that the trend changes and they're in a new state of behavior, all of that other stuff is out the window, worthless and gone. All right, that's a disturbing thought, but it is a fact. It's a disturbing thought to system traders who want everything to be analyzed and quantified and mathematical, unemotional probabilities. Taking crude oil for an example, for the past 3 years it traded in the $100 a barrel range. And then in the past not quite a year, it's collapsed from $105 a barrel down to 40 or whatever it is. It's shed, a tremendous amount. It's a shell of itself. Completely different market now, and all of the stats that may have been relevant in the past are rendered worthless and moot and ineffective and essentially irrelevant. Okay? There are a few things that stand the test of time. If you trade away from the open range in the pit session towards the roadmaps, which are the intraday profiles, you will win more often than not. Now, there are entire weeks where 3 or 4 of the 5 sessions won't go anywhere. 3 or 4 of the 5 sessions will just chop around this open range, and they won't go anywhere until maybe later in the day, and there's a random spike, and they go up or down, or they just chop their way higher or chop their way lower so that it's impossible to hold a trade. There are many manifestations of how price makes its way from point A to point B, from a relative low to high, and vice versa. But overall, as sure as the sun will rise tomorrow and as sure as the sun will rise next year, price will open until they totally abolish pit sessions and they go away, and then something else will replace that time frame. Forevermore, while pit sessions still influence financial markets, if you just sit and patiently wait for price action to be outside of its open range, and then you trade away from that open range towards the roadmaps, I guarantee you will make money. I promise you will be successful. If you just do a couple other things. One of those things are control the impulses to trade the rubbish in between. When price action is inside of the open range or right around it, control the urge to trade heavily there. At the very least, take small positions if you have the ability to alter your trade size. All right? Another thing, believe the charts. Whichever way price tells you it's going, trust that. I can't begin to tell you how many hundreds of sessions, or I should say how many hundreds of times in X number of sessions, I was sure price was going to go somewhere. And then it would break out and it would, start moving away from the open range in a direction up or down, and or it would pull back to the open range. It would have gone some distance and it would pull back to the open range and stop right there. And I would be expecting the reversal to continue on through, and it would not, and it would stop and it would continue on in the direction of the trend away from the open range towards the roadmaps. I've watched this hundreds and hundreds and hundreds of times with my own eyes in real time in all markets, and to know enough that is fact. That is the daily profile of the market. And so trusting that is where I place my emphasis of trades. And the understanding that we're going to see that, the understanding that you and me and everybody else who cares to put this study on their chart and follow it is going to see price action moving in our favor often. Maybe not every day, and maybe a couple of times a day, all right? But most of the time, at least once a day. And so that is the greatest, most powerful, statistically probable constant I've ever found in trading, with no exceptions. The constant of at least one time most days. Once in a while, there are 0 times. And then sometimes there are 2 or 3 different excursions. But most days, at least one time, price is going to leave the confines of the open range and it's going to move towards the roadmaps. Knowing that high odds probability exists statistically affords me the patience and discipline to wait for it. Because if I steel myself in my mind and say, you know what, there's a whole lot of stuff that can go on. I can just take trade signals at random on a trade signal chart, and some will work and some won't. There'll be a lot of stop outs and so on. How about that I just do this? Here's part of the system. That I know for an absolute fact price is going to move away from the open range towards the roadmaps. I'm going to sit and wait for that. That's what I'm going to trade. And when it's over with, if I've successfully captured it, I'm done for the day. Because to my knowledge, nothing else may happen. That might be it for the day. I've seen it time and time again. If I'm not successful in catching it, then I really have nothing to lose. If that happens, if price action breaks out of the open range and it makes a directional move and I did not catch it, I have 2 choices. I can trade whatever signals come along on my signal chart, which is not shown here, and then hope for the best. Or I can just probe around a little bit, not lose much money, make a little bit of money, call it a day. Or I can just sit out the day and say, that was what I was looking for. It's over with. Now, when I first started trading and for a long time afterwards, and this is true for just about every trader, I thought my job was to trade all day every day, or at least to try and catch every single move in the market. And of course, when I got started, the market would reward such thoughts. All markets, stocks and futures, were a lot more volatile. They made many more swings intraday. We didn't even know what an algo or an HFT program was. There were computer algorithms, but they didn't dominate all markets like they do today. All right, there was a lot more opportunity intraday then as there is now. And so if you traded all day every day and you traded every wiggle and swing, invariably more of those would work out in favor then as opposed to now, because that's how price action was. The markets are much more muted now. When they move directionally, it's often brief and explosive, followed by hours of sideways directionless range. All right, sideways trending chop, if you will. And so with that understanding, now more than ever, I have shifted my mentality from I have to try and catch every move of the day. I have to try to catch a majority of the, possible ticks or pips or cents or whatever, to the, I just need to catch something. Just give me some amount of respectable money, more days than not, and I'm good. I don't care if I make 30 ticks in crude oil, for example, $300 a contract early on, and I quit. And then if I'd kept trading, I could have caught 700, 900 more. I'm sorry, 70, 80, 90 more ticks. Another $700, $800, $900 a contract. But I didn't try for it. I don't care anymore. That used to eat me all day and through the night and into the next day and sometimes the following week, where I would, and some of you who've been in the live room with me for a number of years can remember back a long time ago, where I'd be like, oh man, remember Tuesday? I was in that trade and I just got stopped out to the tick and I'm not over that yet. These days I'm over it as soon as the trade is out. I mean, I still get miffed and I still get frustrated and I get bored and I experience all of the emotional things that I ever did. But I just control them. I'm just like, that's trading. Today I wasn't able to capitalize for whatever reason, and so I'm going to shut it down with no damage, tread water, move forward. Or my thought is, I've caught enough for today. That's good. That's fine. I remember too many days where I would make 30, 40 ticks and then give them all back and end up red in the past. I don't want to do that anymore. Okay, so first and foremost, I have two mindsets. And I would respectfully suggest everyone else might follow suit. The first mindset is, I'm just going to sit and wait for the low-hanging fruit. I know for a statistical, absolute, ironclad fact, a universal law of mathematics and markets, that price is going to, more days than not, move away from the open range towards the roadmap profile levels, and I have to focus on capturing that potential when it offers itself. And I don't care if it's just 1 or 2 days a week that are successful and the remainder of the days I tread water. I really don't care. Because if I don't go backwards, if I just stay in where I have progressed to this step and then take the next step with the equity level and then the next step with the equity level, by the end of the month I've stepped a long ways higher than where I am. And I don't care about what's left on the table. I don't care about what I missed out on. I don't care about anything else. Okay? And I don't know if you call that a professional mindset. If some people might say, jaded or burned out. I disagree. Some people might say, and I've heard him say this. Well, if your system was any good, you would be able to trade. You wouldn't be scared to trade. Just part of a day. You wouldn't be scared to quit. You would trade all day. And the reality of it is this: anybody's method or system, with no exceptions, doesn't show them where the price moves are going to be. It shows them where places on a chart are that if there's going to be a price move, here's where it's going to begin. Okay? There's a subtle but profound difference in that. A trade system signal does not show you where the market's going to make a directional move. It shows you where a directional move might happen. Okay? And giving you the statistical edge. But you might get X number of trade signals in any system or method known to man in a day, and none of them work. None of them go anywhere. Those signals simply show you where the tipping points are on the chart, where if price is going to do anything, here's where it's going to happen, but price does nothing. A system cannot tell you when on any given move that's going to be successful directionally or failed sideways. No system known to man can do that. So it's not a question of, do I trust my system? Is it any good? So on and so forth. It's a question of, I'm looking for where opportunity lies in the market, and I know that I can count on opportunity existing away from the open range towards the roadmaps. And my system is going to show me those tipping points where I get in that more likely than not price is going to continue on in what will be my favor. More often than not. Some days it won't go anywhere. Some days everything will stop out. Some days price will, take out any stop I try to use and then continue in favor, and a whole lot of different manifestations. But if I just focus on high odds statistical probabilities, and I do that day in and day out, and the days where it doesn't happen, this is the important part. This is the most important thing I'm going to tell you all night and as long as you're going to be here with me. The most important thing is don't lose money. All right? And I don't mean don't lose 10 ticks here or 20 ticks there in a given day. I mean don't have 40, 50, 60, 100 tick losing days. Don't do that. If you don't do that, you only need 1 or 2 winning days in a given week to move greatly forward at the end of the month. Market conditions have changed now from what they used to be. They used to be a lot more favorable. There was a lot more opportunity. There was a lot more oscillations and swings. There was just more chances to be right. Okay, they're not like that now. And I will tell you this, the transition in markets from then until now has also been a dramatic change in my mindset. Here's what my mentality used to be in crude oil. Hey, it's going to travel 200-300 ticks intraday. It's going to offer on average 2, 3, 5, 50, 80, 100 plus tick swings intraday. So I can afford to go 40, 50, 60 ticks in the hole because all I need to do is catch one of those directional excursions and I'm good. And we're talking about just the choppy days. I don't mean every day. Some days I'd take the first 2 or 3 crude oil trades years ago and I'd be up 100 plus ticks. All right, first trade would go 51, second trade would go 72, third trade would go minus 10, fourth trade minus 10, fifth trade would go 40, 50 ticks. At the end I'd be up 120, 130, 140 ticks. That's how the markets used to be often. Nowadays that's rare. And so I cannot afford to be sloppy and go 40, 50, 60 ticks in the whole intraday expecting a 100 tick move to invariably is going to be there to bail me out because more often than not they don't exist. All right, and so I have greatly tightened my game on the risk management side. I've greatly tightened the belt on losses. I use a minus 5 tick stop. If I get stopped out 3 times in the same trade, that's cool with me. I'm down 15 ticks. And the fourth trade or the fifth trade is going to go better than 15 ticks. And then the very first thing I'm going to do is trail a plus 16 and break even. Here's a universal law of trading. And I was told this early on by someone who'd made millions of dollars trading and he'd also lost millions of dollars. And he said, the good days where you're going to make your money are going to be ridiculously easy. When there's a good day for trading, whatever your system or method is, everything you do works. And you can't, everything goes smoothly, the money piles up. Those are the days to treasure. The days that you're fighting the market, the days that it's a constant struggle where nothing works and you're frustrated and you're pissed off and you're venting and then you revenge trade and tell me I'm not the only one who's ever done that, who after a certain period of time by the middle of the afternoon I'm just like forget this or whatever and then just start clicking buttons in, and at the end of the day when my blood pressure's through the roof, my account balance is through the floor. Am I the only one who's ever done that, or has anyone else here? I don't think I'm alone. Okay, so to go from that to a passive approach to say, all right, here's the system. I'm sitting down. I have no idea what the market's going to do. I'm going to let the market do what it does. I'm going to assume that it's going to be a struggle, And so I'm going to be very tight on my risk management, and I'm going to let the good days take care of themselves, because on the good days, no matter what you do, it works and the money piles up, and there you go. What I need to focus on are those tough days. And when the tough days come along, I can't fight them. All right? And sometimes it's just, part of a day is difficult, and you get in a trade and it stops out, and you get in a trade and it stops out. You get in a trade, it goes a little ways, then you move your stop, to either 0 or plus something, and it comes back and it stops out. Then it goes in favor, and just all the different things that the market can do to tweak our emotions. Whatever that case is, my mindset every single day on every single trade has to be, don't lose much. Every single day, every single trade, don't lose much. All right, completely different mindset and outlook than I used to have in the past, and even in the recent past. Even as recently as last year, I still trusted crude oil to make, the big moves intraday, and or that I could catch them, and that didn't always work out. I wish I had adopted the mindset of don't lose money, don't lose money, don't lose money before, because in my opinion, the results of that would have been 2 or 3 days of break even and 1 or 2 days of moving forward and onwards during trying times. And don't get me wrong, you're going to catch weeks, a week or two or a month or whatever, where volatility spikes and the market is trending, and 4 out of 5 days a week are going to be great. I know coming up this week we have rollover. I think it is Thursday that the current contract this September goes to October. And so I know that on Tuesday or Wednesday is probably going to be sketchy trading when that one day where the volume splits. They're just going to drift and chop and be a 2 or 3 tick spread and so on and so forth. So if I find myself taking a couple of trades and I go minus 20, 30 ticks in the hole that day and I don't think I can get back out, I'm just going to stop, and that's it. Prior in the past, I would think it was my absolute obligation as a trader to try to take a session that I've worked really hard in, and I'm sitting at minus 17 or minus 20 ticks. I'd feel like it was an obligation to take it positive, and at the end of the day I'd be minus 50 or 60 ticks and a whole lot more trades. Okay, so my mindset now, first and foremost, don't lose much, don't lose much, don't lose much. And if I take care of that, which I've been doing for some period of time now, since this mindset shift, I think I've had 2 or 3 net loss days total out of several weeks. 2 or 3 net loss days. Now, don't get me wrong. Some of those, quote, profitable days were nothing but 1 or 10 ticks or even 1 tick. I've had a few days where I was at 1 or 2 ticks after all costs, 10 or 20 bucks. And some of those days, the market made a big move afterwards. I threw in the towel. I said, wow, I worked really hard to get to 1 tick. 2 ticks, that's it. I took a lot of trades, nothing happened, and then invariably shortly after the market took off, and it would have been, oh, woulda, coulda, shoulda, there it was. That doesn't matter to me anymore, right? And I'm sharing these things with you from my own personal first-person viewpoint, hoping that you can see something of value in that yourself. Maybe all you need to move your own success to the next level is more of a mindset of trading not to lose. And the not to lose mindset comes from the understanding of when the good days come along, they take care of themselves. I mean, you put a trade on and you barely get filled and it's already running in favor and there's all kinds of money, and you put your stop in, nothing takes any heat, everything's great. There you go. Those days we don't need to worry about. Right? Those are on autopilot. What we need to worry about is managing the days that are difficult. And so first and foremost, that's my mentality, and that's what you're going to see tomorrow and the next day and the next day and the next week and the next month and the next year. Because once I adopt a mindset and I find that it works, I stick with it. All right? There was a time when my mentality and my outlook, going back from in the evolution of I need to trade every day, my God, there were years where I did not take a single day off from the market, and if I did, if I was at a funeral or whatever, I about came unglued, or a wedding or whatever the case may be. I couldn't even concentrate. I'm like, oh, the market's open. What's it doing? What am I missing out on? And so on. And then the next mindset was, well, the market made a move. I should have participated. I can't believe that all of a sudden somebody said something somewhere and the market exploded in some V-turn and went the opposite direction, and I didn't, climb aboard. And I would spend endless hours wasted trying to figure out how next time that happens I can not miss out, and so on and so forth. To where I am today, where my mindset is, you know what? If I can just make a couple few $100s per contract, more days than not, that's terrific. But those days not, I don't want to give any money away. Completely different mindset. Whereas I used to trade to win and win big, trade to, hold for the big moves. Now I don't. Lastly, on this topic, in the past, especially with crude oil, I would consider a 40 tick trade like a partial, like a half a victory. And anything beyond 50 ticks in a trade was good. And really in the past I held for 80 and 100 ticks and quite often hit those. The market at $100 a barrel made more 100 tick moves than it can now. That's just, fundamental math. Okay? And through the years, using the methodology that I do, I don't know how many trades went 20 plus ticks, 30 plus ticks, 41 ticks in favor, unrealized, and there it is. And I would sit there and say, well, what should I do with this? Should I trail to plus X? Should I just take off this trade? So on and so forth. And I'd leave it alone, and it would come back against me and stop me out for a small gain or par. I'm like, oh, okay, maybe it's going the other way. So I would take a trade going the other way. Guess what? Same thing happened. It would go 20, 30, 41 ticks in favor, stall right there, and come back. Some days this happened more than twice. And at the end of the day, I never did find that 50, 60, 80, 100 tick move I was looking for, but I would have been in and participated in, let's say, 3 moves, whereas if I just took any 2 of the 3 off at 25 ticks, I would have been at 50, both combined. I have seen that so many times in my career, literally looking at my price dome, literally looking at the unrealized gains, literally pondering if I should take them off, and then they, snap back, come right back against me and stop out. That I understand it's going to be there. And so I know for a fact that tomorrow or the next day, more often than not, I'm going to be in some trades and they're going to go 20 plus, 30 plus, 40-ish ticks in favor. Maybe 1 or 2 of those will continue on to infinity and past, but the majority of them aren't going to go much further, and I'm going to manage them as such. And I'm going to piece together 40, 50, 60 tick days, 2 or 3 of those trades at a time. That's the mindset that I have now. And once that's accomplished, I'm done. I don't care what the clock says. If we get started trading and at whatever time, 8:20 a.m., 7 a.m. Eastern, the market makes a directional move, I participate and I capture it, I might be done trading for the whole day. I'll still stick around and I'll still go through the whole educational process. Here is this and here is that and here's the other thing, but I may be, shut down and done successfully for the day. And so I took the first 30-ish minutes of this conversation here tonight to impress upon you the mindset that I have as a trader. When I get started tomorrow, I don't care what price did overnight. I don't care what it's going to do during the day. I don't care if it's a 500 tick range. I just want to capture what I'm looking for, the low-hanging fruit, the high odds probability moves for an acceptable number of ticks, and then I want to protect those gains zealously and keep them in the account until the next day. And that is the mindset that I have as a trader today. Trade the high probability moves, trade not to lose, and when profitable enough, quit trading. Okay, so in other words, I consider a lot of the years past, or a lot of the days past in years gone by, where I fought the market. And to summarize, I just try not to fight the market anymore. I try to go with the flow. And when things are flowing well, the money flows easily or adds up in the account, go with that. And when things aren't flowing well, when it's a struggle, when I just am not in sync with the market, or quite frankly, price action stinks or whatever, shut it down. Don't lose, don't lose, don't lose, and the wins will take care of themselves. All right, so that concludes what I have to talk about as far as the mindset. Now we'll move forward and get into the nuts and bolts. So I will be right back.